Good morning, everyone, and welcome to today's webinar delivered in association with Zurich. For those of you who don't know me, my name is Katie Scott and I'm the editor of Insurance Times. I'll be chairing the discussion today. So I hope everyone has their notepads at the ready, as we are going to be spending the next hour really digging into some of the topical trends and themes that have arisen from Insurance Times' 2025 5-star rating report, focusing specifically on the commercial lines insight from brokers this time. So the final report was published in full in March and can be found via the Insurance Times website if anyone wants to have a little sneak peek there at some of the findings. So joining me for this conversation, I have some great panelists for you today. I'd like to welcome Morgan Lyons, Head of Retail Commercial at Zurich UK. We've also got Mike Latham, Chief Executive at Verlang UK, and Savan Shah, Insurance Times' very own Head of Research. So thank you all for giving up your time and being with us today. Really appreciate it. So let's get stuck in straight away. So one interesting aspect of Insurance Times' report is collecting feedback from brokers of all sizes from across the whole breadth of the UK, really getting that view from the regional broker market on what's important to them, what their concerns are, what trends they're seeing. So one thing I thought would be quite interesting to discuss is what makes for a successful insurer-broker relationship in terms of really reaching those four corners of the UK and engaging with brokers across a range of locations. So I know sort of Morgan, Zurich obviously has branches all over the place, and Mike, the same with Verlang, you guys have got branches across the UK. So I don't know who wants to sort of get stuck into that first.
Yeah, I guess morning all, and yeah, thank you for hosting us this morning, Casey. So I guess I mean, in terms of what makes for a good relationship with the regional brokers is, I guess the first thing is you need to have the regional footprint. So you need to make sure that you've got those office locations in the geographies of the brokers that you're wanting to trade with. If I look at the survey results, that the brokers do appear to value that local presence. Whether that be access to underwriting or sales, you need to be visible. You need to be there. We've got 11 offices from a Zurich perspective across the UK. We've increased the number that we've had over the last couple of years. We opened up in Bristol and Southampton and Chelmsford, and we continue to invest in people in those locations to enhance our capabilities, I guess. It's key to making sure that you can maintain those strong relationships. But I think what I would say is, and when I looked at the results, I think it's quite interesting that perhaps that local presence has not come through as strong as perhaps it may have done previously. And I do think that there is a changing dynamic potentially there that might be something that we can touch on. I don't know what your view is, Mike.
Yeah, I agree on a couple of those points. So one, I was surprised that the results didn't favour more strongly a local presence, but maybe that's a generational thing, or maybe it's a segmentation thing. Maybe it depends on the kind of business that you trade in, and if you're trading more commercial or schemes or specialist business, that it's not as important to you. But for us at Verlang, where some of our propositions are more complicated, then that local presence is really valuable. And I agree, having that footprint that matches off where your brokers are is important. But I'll also use a word that we often use is partnership. So for me, those relationships are built on partnership. Establishing a set of behaviours and attributes that ensures the insurer and the broker, and ultimately the client, derives value. That I think is the real rock bed of relationships, and those relationships are built over time, and they're built on trust. All parties looking at the relationship with a long-term perspective. Where there's no trust, there's no relationship, and trust for me is often built through face-to-face interaction, or more strongly built through face-to-face interaction. You can build trust remotely, of course you can, but I think we're all still human beings. And I think we're all better when we spend time with each other.
Yeah, I agree. Just picking up your point in terms of that segment piece, I think, our experience from a Zurich perspective is, we've got two big SME centres where we're trading with brokers across the UK, and we've really concentrated on our service delivery and the speed and quality of response of those teams that work in that environment. And I think perhaps at the more digital end of the trading relationship, you can do that successfully remotely in terms of the response and the speed of it is as important as the face-to-face bit is in the more complex area. And I agree with Mike. I think when it gets more complex, there is that requirement for that ability for your teams to sit down with our underwriters to discuss, clients and clients' risks face-to-face.
Yeah, and I know that a part of the survey, one of the focuses was responsiveness. And I think if you ask the teams, would you rather have a really good, quick remote response or a slow local response? I think they'll take the response.
Yeah.
Yeah.
And that's why I think, we're focusing on ensuring that we're delivering a service to our broker partners that is really driven by speed and the quality of the response. And we'll continue to focus on that as we move forward. Yeah.
No, definitely. And that's something I think that comes up in the research quite regularly, is that insurer responsiveness to broker queries. And as you guys touched on, especially with some commercial lines products where the cases and instances might be a little bit more nuanced, especially at the SME end, I imagine. So Sav, I think it might be quite interesting to pull on some of the stats here in terms of the responsiveness that commercial lines brokers reported from sort of broker partners. Is that something you can sort of just touch on for us, just to give a bit of context?
Yeah, of course. So yeah, let me just take this opportunity firstly to thank all the brokers that continue to take part in our research. It really is much appreciated. But yes, touching upon the kind of offices in the region of the brokers, we did ask a number of questions around regional presence, regional kind of expertise, and it was interesting to find that 71% of brokers, so we had just over 750 brokers take part, and 71% of brokers did say that it's moderately, very or extremely important when deciding to place business with an insurer to have that physical branch or the offices in their region. So it is definitely something that is of importance to brokers. And of course, there's many areas that you have to have that right balance in, whether it's that expertise, the staff, the decision making of the staff as well. So yes, I think it will only kind of continue to grow to have that regional kind of presence and that regional kind of expertise as well, because of course, when you're able to see each other, face to face, that's how those relationships are really built over the long term.
No, definitely. And was there any sort of particular stats around the responsiveness element in terms of that kind of local presence? Was there faster response times if there was sort of a more regional presence?
Yes, of course. So it was a direct kind of correlation where if the insurer had more of a presence in that particular region, they were able to have a much more kind of faster response rate, and that was not only kind of responding to kind of phone calls and emails, but also to have regular catch-ups, regular meetings with different levels of the business as well, in face to face. And I think that's very much appreciated. Some of the feedback that came back from brokers was that, of course, senior management would be spoken to, but of course there are many other members of the team that are part of the process, and when that engagement is there throughout the different levels of the business, that's very much appreciated, and that longevity of knowing someone you can turn to when there's questions, when there's queries, is very much appreciated and came out a great deal in the survey.
Oh, definitely. And Mike, from your sort of perspective as a broker, sort of doing the day job, so to speak, how would you describe sort of the responsiveness from commercial lines insurers? And has this sort of changed, improved over the years? What kind of timelines are sort of typical in your experience?
It continues to be a challenge. It's never quite as instantaneous as you would like. Looking at it from two angles, if we think about from the broking side, going to insurers for a new business case or a renewal, we like to be ahead of the game. We like to have a really clear, project plan, a timeline that we share with the client to say, these are the things you can expect. What we find is we submit those proposals early to insurers, but the insurers tend to deal with things in date order. So an inquiry from another broker that's been submitted probably many weeks after ours will probably be equally prioritised, which I think is a challenge for us. On the existing side, where it's renewal terms, again, things tend to be a little bit later. And I think insurers, again, working in date order and looking to manage their workloads, and resource is a problem for the industry. We know that, but we're not casting blame, or we're just talking about how it feels on this side of the fence. It sometimes feels that it's he who shouts the loudest. If we'll submit something, we'll say, look, we want a response by Wednesday, but if you want a response by Wednesday, you better be on the phone on Monday, making sure that they remembered you want a response by Wednesday. So it's not efficient, and it takes a bit of hard work and a bit of focus from us to get those solutions that we want for the clients. I mean, sometimes we're going to renewal meetings with gaps in reports because we're still waiting for responses, which we've asked for, in plenty of time.
Yeah, just to add
That
to that,
paints quite a bleak picture, doesn't it?
yeah, sorry, Kate. Just to add to that, no, it's no, quite right what you said, Mike. And in terms of course, within the commercial line survey, we look at 5 overarching service factors: claims, policy documentation, quality of cover, relationship management, and underwriting experience. And it's just worth noting that, of course, in terms of the highest performing factor was quality of cover, and has been for a number of years. And relationship management was the kind of lowest performing factor, but it is worth noting that there has been kind of improvements over the year, small improvements, but it is improving. So a lot of more kind of work to do. And of course, for example, when we were looking at a number of we in the survey, we look at the responsiveness for kind of each insurer. And when we were kind of looking at in terms of brokers that are kind of working with Zurich, we found that 88% either had an excellent or a good kind of experience when it came to responsiveness and timeliness. But of course, that does change per insurer, and of course that is reflected in the kind of overall results of the star ratings.
And it could also, I guess, reflect in the relationships that broker and that underwriter or claims person may have.
Yeah.
No,
Yeah,
definitely.
If I look at where we are, you mentioned the SAV in terms of the response in the survey, and I think a key part of our strategy has been that responsiveness and timely responsiveness now for 24 months, and we've got real transparency over that. And our teams are very much aware that
You've gone quite quiet there, Morgan. Would you be able to sort of turn your microphone up a little bit or come a bit nearer to the microphone? Is that okay?
Yeah, is that any better? We lost me,
Or the gremlins have struck.
Oh dear. Okay. No.
You're still quite quiet. We can just about hear you, but it is very quiet.
Okay, I'll try and I'll log out of the room and come back in and see if that helps.
Okay, yeah, no worries, no worries. In the meantime, I'll pick on you a bit, Mike, if that's all right. You obviously were talking about having to chase insurers and that responsiveness sometimes not being where you guys need it to be in those conversations with clients. Would you say that's perhaps the key challenge when handling sort of slower response times, or are there any other difficulties from your perspective that this kind of issue brings you?
Yeah, so the 2 challenges are one, the rework or the additional work in chasing. And the broker's ability to plan their day and to plan their schedules, but it's that lack of certainty for that client. When we go to the renewal meeting, we want to be at the renewal meeting perhaps a month ahead of time to say this is what the situation will look like in a month's time in terms of cover and in terms of the insurer, the carrier, and the premiums. When we're there like 1 or 2 days before, filling in those gaps, it doesn't reflect well on us. And it probably doesn't reflect well on the industry.
No, definitely. And let's face it, there's been enough reputational damage, I think, over the last few years, probably arising from the pandemic onwards, I imagine. Are there any particular lines of business in commercial lines that are more impacted by sort of slower responses? Are there some that you find you get a quicker response from, or others that are more time consuming?
I think it tends to be more complicated property casualty financial lines, less so with the fleet. But again, I think it's where internally the insurer maybe has to have some sign off or some internal referral points where it just slows the process down a little bit.
No, definitely, that makes sense.
Hopefully you can hear me now,
Oh,
Katie.
yeah.
Is that better? Yeah, brilliant. So,
Better,
sorry
thank
about
you.
that.
No, that's fine. I can throw a question at you straight away now that you've appeared. Obviously, Mike's outlined quite a lot of challenges and a slightly sort of detrimental, I suppose, experience when it comes to insurer responsiveness. I just wanted to sort of get the insurer take on that, really, in terms of how are insurers, yourself and your peers, for example, looking to improve responsiveness for broker partners, and in particular, what has Zurich done?
Yeah, I think I recognise that some of the points that Mike made, the frustrations that you would have as a broker when you've got a demanding client who's looking for renewal terms and looking for a service from the broker, and if you're being let down by the insurer, then I completely appreciate the challenges that creates. I think what I would say is, if I look at the survey results, as I've said before, I think we scored pretty highly when it came to responsiveness and the quality of the responsiveness, and that has been a key part of our strategy for the last 24 months. I'm not suggesting that we don't have work to do in that regard, because absolutely we do, but we're very clear internally, and we've got a high transparency for our teams in terms of what does our quote response look like when we get a submission in, how quickly are we getting back to the broker. When we're talking about renewal terms, we've got real line of sight on when renewal terms are being issued, ensuring that we are having those discussions early as possible. And that's where we've encouraged our teams to have those renewal surgeries with those key partners that we do business with, sit down and understand the demands that their clients have on them. If they need those renewal terms 2 months in advance, because that's the way that the client wants to work, we will we will do our very best to work with the broker to ensure that they're in that place. And it's a key KPI for us, and all our underwriters have that KPI in their objectives to deliver that quality, speed of service. In both our mid-market and our SME business. And if I look at where we were, let's say 5 years ago, we certainly didn't have that transparency and line of sight at case level in terms of how quickly we were responding. And I think having that data and that insight really means you can shape a strategy around just what does that holistic service delivery look like to the brokers, and where are the gaps, and where do you need to work to fill those gaps. And that's what we're still working to do that, but we're in a very different place compared to where we were 2 years ago.
Yeah, and it's not damning across the board. There's some really good examples where there's a relationship between the broker, the underwriter, and often the client, where these projects go to plan. I think one of the problems is when you have a new underwriter on the case who's finding his feet with the account and hasn't got maybe that degree of knowledge of the account or that relationship with the broker or the authority within the insurer. But yeah, I can think of many accounts, Morgan, particularly on Zurich cases where we are well ahead of the game.
Yeah, and I think your point, Mike, around empowerment is really key as well, because it's right to be quick, and it's all right getting back to our brokers in the time that they want. But if you haven't got the empowerment at the front end to make the decisions when it's really needed, then the speed is not as important. So it's really key for us to make sure that we've got teams that are able to make decisions, are able to use the empowerment that they've got, and that they're confident that they can deliver that to our brokers when really key part of our strategy to make sure that we've got that at the front end. We don't have an head office function in Zurich, which is different from some of our competitors. So that point, Mike, that you made around waiting for sign off on things, I recognise that in other environments that could be a challenge, whereas what I would say from a Zurich point of view is very little needs referral out of our individual regions, and we have people in there that can make decisions when needed.
That's really interesting. And what would you guys perhaps say are some of the other pain points really in that insurer-broker relationship? Obviously, we've discussed all the responsiveness point, and it's great to hear some of the stuff that Zurich's been undertaking to tackle that. But are there any other areas where you feel there's still a little bit of friction that perhaps needs remedying between this regional broker market and insurers in commercial lines?
I'll go first, Morgan, on that. Maybe you can respond. I do think sometimes that the insurers and the underwriters don't see through the broker relationship to the ultimate client and think about what impact some of the decisions or actions would have on that client. It's going back a couple of 3 years, but I think it reflects the current situation in the stock market as well. But we had massive overcorrections in the financial lines books and the cyber books. It was a market move. We had some clients who had significant increases in premiums and reductions in cover and really late decisions. So we had some tough discussions with our clients, who then had to go and have really tough discussions with their boards, and a couple of them had to take reduced cover. And then a couple of years later, we find the market levels back out again. So it feels like that was an overcorrection, an overreaction. And then 2 years later, a lot of those things went backwards in terms of more cover and less premiums to probably a more sensible rate. But that overcorrection felt that it was an opportunity for the market, for the insurer market, to get those increases, as opposed to thinking about what impact will this have on the end customer.
Yeah, and I recognise that, particularly in financial lines, Mike, a few years ago, there was a correction, but was there a position taken by some carriers to take advantage of market conditions? Potentially. I mean, I think I can only comment from a Zurich perspective in that we do pride ourselves on trying to be consistent, and I think that yes, we will follow the market cycle to some extent, because absolutely you have to in a market that's starting to soften off. But I think we try and be as consistent as possible with a view to giving that stability to brokers and clients, that we won't knee-jerk in certain situations, even when market conditions may allow us to do that. And I think when the market hardened, particularly on property lines, I think we stood by that in terms of what we did. Yes, we had to do some degree of line sizing in certain areas, but we tried to maintain our credibility by maintaining capacity and actually being cognizant of the fact that there is a client in the relationship, and you don't want to be taking advantage, should we say, of certain clients when the market would allow that. And when we look at a softening market, yes, of course, we will compete in a softening market. We will have to. But what we won't do is chase the market to the bottom. And, Drazen, who's our new UK CEO, you may have seen an article that he did this week, where he's talking about value and the quality of the proposition that the insurer provides. And I think that's what we as Zurich will very much stand by is, we feel that we've got a quality proposition across from a relationship perspective to service delivery from both underwriting and claims, and we will deliver that client value, whereas maybe other carriers might not be able to provide that full rounded customer view, and we'll have to stand by that in the market, but we're not going to chase the market to the bottom.
Yeah, it's interesting you mentioned proposition. I think it's a really good point. There are some very sensible insurers having some very non-sensible conversations with us. There are, when you hear conversations like whatever it takes, it doesn't fill us with confidence. Of course, it's great for clients to have a reduction in premium, but it needs to be sustainable. It needs to be sustainable for the longer term, so they don't have those surprises. Because I guarantee you, a client will take that reduction in premium and then not think, oh, for the next 2 or 3 years, I'll just provide for some additional premiums because the market may correct itself. It only goes one way. If there is extra appetite, I would rather insurers, moderate the premiums. It helps the clients, definitely helps the economy, but work on the proposition. And Dreiser mentioned proposition. I think that's great. So widen the proposition that's there. Maybe invest more in risk management. If we've got extra appetite, say, do you know what? We're going to take 10 points off the premium, but what we're going to do is go really heavy on the risk management to help the client manage their risk, which helps their premiums be sustainable for the longer term.
Yeah, I think that's a great point, Mike. And I think, again, from a Zurich point of view, ZRS is a great resource for us to to look to Resilient Solutions, that is, to look to provide some of those services and have those discussions where we can provide that service to the client in an environment where they've got additional capex to spend because of reducing premium levels. So yeah, absolutely, completely agree.
Yeah, and just to touch on that, we did look at that question in terms of risk management kind of guidance in the survey, and it was very interesting to see that nearly 60% of brokers do look towards their insurer partners for that risk kind of management guidance. And I think when you touched upon kind of appetite, one of the things, the trends that did come out of the survey was, of course, there's for a number of years, there's been a clear kind of disparity felt by those more smaller brokers versus those kind of more larger brokers in terms of service, communication. And I think when it came to kind of appetite and many, in every kind of survey, we always receive comments from brokers about how sometimes there's a computer says no approach that is given to them, and they don't kind of sometimes not given the kind of rationale behind these decisions. So there's a number of areas, whether it's the small versus large kind of brokers, the service there, the changes when it comes to staffing. Also, of course, it's not the fault of the broker when there are major kind of company changes, mergers, or acquisitions, and of course there's a huge kind of transitional kind of period, and it of course takes time. But I think that continuity of with their kind of BDMs to have that continuous relationship going forward, and to be really clear, okay, yes, if someone's leaving the business or someone new is coming into the business, that kind of time to build that relationship, because of course sometimes many years have taken place where that relationship has been built, and then of course suddenly maybe someone has left or moved along, and then it's kind of starting again. It's almost, and that frustration did come out a lot in the survey. And I think having that kind of proactive approach rather than that reactive approach is something that has proven successful for many of the insurers that performed really well in the commercial line survey.
Yeah. For me, it's about, I guess, multi-level relationships, in terms of the broker and insurer relationship. It's all very well Mike and I having a good relationship, but for me, that has to be mirrored at all levels within the relationship between insurer and broker. And more importantly, is what everybody in that multi-led relationship has an appreciation of what both are trying to achieve. Mike talked about partnership, and for me, that's making sure that if we're working with a broker, we're communicating what the strategy is to our teams, what part we expect our teams to play in that. And I think that the disconnect happens when frontline trading teams don't appreciate the joint strategy that you may have between insurer and broker. And I think that's where it falls down, because I think it's very easy to have a great relationship at a strategic level, let's say, but that's not mirrored at the trading end, because let's be fair, that's where all the action happens, is in in Manchester, in Bristol, in Cardiff, Southampton, where our frontline teams are trading with brokers. So for me, it's about multi-level relationships, but the understanding of our frontline trading teams looking to understand what we're looking to achieve.
Yeah, I agree entirely, Morgan. We do an annual insurer survey internally, and we'll bring feedback to the insurers individually to say, this is where you rank across various aspects of the service that you provide. One of the also things that we survey is the strength of the relationships, and we have a relationship matrix for certainly for each key partner to say, from the chairman, CEO, broking teams through to the trading teams and the claims teams, how strong is the relationship? How conducive is it to being, providing efficient, really good solutions for our clients? And where there's gaps, we work on them.
Definitely. And how does digitization really impact this partnership relationship dynamic that we're talking about here? Is there a way that digital tools can support insurers to build better relationships with brokers or be more responsive? Or is there an element of brokers prefer to have that human touch?
I think it's horses for courses.
Mm.
You won't build a relationship through a digital tool, but what you will get is appreciation for the efficiency that it creates. I mean, Sam talked about computer says no. Digital tools are not massive for us, but we have in our smaller end, in our specialist areas, we have online systems. The insurers encourage us to use those online systems and use a little bit of e-trading. And when it works really, really well. And it probably works 90% of the time. But the angst that 10% of the time creates in terms of trying to find a solution around it is disproportionate to the solution that it often provides.
Yeah, that's really interesting that you say that, actually, because that's some sort of a trend that we've sort of noted quite a bit in terms of commercial lines perhaps lagging behind, say, the personal lines market when it comes to e-trading propositions. And I guess it's worth shouting out that Insurance Times has our very own e-trading report coming out very shortly ahead of Bieber. So anyone who wants a bit of light reading on the train, hit us up. But yeah, it'd be good to get your thoughts in terms of how you feel commercial lines really products, especially say commercial combined, work on an e-traded basis. You know, what's the direction of travel? Are there more commercial lines products going onto e-trading platforms, insurer extranets and the like? Is it becoming more common, or is it more trouble than it's worth at the moment?
I think it has become more common. It's not a big feature for the line.
Yeah.
The amount of business that we have that we traded on e-trade in the commercial area is probably less than 15% of our total book.
Right.
That perhaps brings its own problems, and that we have a team that does that and does that really, really well. But we don't have a huge team that does that. So we're probably not as proactive as perhaps we could be. We tend to take what's given to us and work what we have, rather than having a bigger voice at the table to say, you know, this is a really significant part of our book. We must get this better.
I think it's an interesting topic, Katie, and I think it's been on the agenda for a number of years. And you know, you look at some what you might call relatively new commercial brokers that have built really successful businesses in that e-trade environment, but trading commercial. Yes, it tends to be more sort of package and, let's say, property owners shop at the smaller end, but they've built really successful businesses concentrating in that area. I think what we experienced and what we're seeing is there's definitely a broker demand at a strategic level to trade more complex, lower commercial combined in that e-trade space. And you know, from an insurer point of view, we are increasing our capability to deal with more complex risks in an e-trade environment. But I think there's two perhaps main challenges that I see in terms of that commercial combined environment is that, one, the insurer's capability to deal with more complex, because I think all markets have got somewhere to go there, because I think if it ticks all the boxes and it fits, it's fine. I just think sometimes there's areas that fall in the grey, and it's how do you make sure that those risk elements that do fall into that, a big challenge in terms of the broker market, in the perception of what is capable of being e-traded. And I also think that, you know, if you look at regional brokers, there's probably people there, handlers and broker account handlers, that are trading in a manual environment, that perhaps some of that could be digitized, but that's the way that they've done it. And actually there's perhaps a reluctance to start to operate in that area where it's a little bit more complex. If you look at some of the larger strategic brokers, they're battling with that challenge, because the margins on the smaller CCI business to service those clients are probably a lot thinner. So, you know, they probably do it by phone. They can't necessarily do the face-to-face bit. And I think the challenge for the broker market in that space moving forward is they're going to have to trade some of that more complex CCI products digitally in order to ensure that the margins that they're returning on it work for them. And I think the larger brokers who've got very large volumes of business at that smaller end that could be digitally traded actually have woken up to the fact that they need to do something and actually move a lot of that business over into a more digitized environment. And we're starting to see that, but they've got their own challenges to bring their teams along with that.
Fascinating. I mean, Sav, do you have anything to add in terms of the data?
Yeah, no, definitely a number of areas. So having worked on the e-trading research for a kind of number of years, I think it's a really, it's grown kind of every year, and it's really been progressing really well. Of course, there's many areas to improve, but I think, you know, now is a really kind of exciting time with the different capabilities of AI and technology and innovation at insurers, and as well as on kind of software houses. But of course, when it comes to some of the trends that have occurred over the last number of years, so we've looked at kind of complex kind of products being traded, and of course, looking at the time that a broker kind of has to wait for any trade referral to be cleared. And kind of this year, as well as last year, it stayed around the kind of 70% of brokers waiting for a day or 2 days plus for that complex product to be cleared. So yes, it's a very exciting time, but I think that balance does need to be found by each insurer. That you know, having that balance between that kind of human touch as well as understanding the broker, because I think as more data becomes available about the preferences that brokers have going forward, about how they want to have that engagement, where that kind of digitalization occurs throughout the kind of journey, and where that human touch should be as well. That should never kind of be forgotten. And of course, when we looked at kind of technology kind of innovation, you know, 91% of the brokers in the commercial line survey felt it was, you know, very kind of important, very or extremely kind of important, that as a deciding factor on where to kind of place business. And I think finding that balance and not spreading yourself kind of too thin, if you don't have the capabilities to back up the systems, back up the live chats, you know, if you're waiting for a response on whether it's live chat or through you know, the responsiveness on chat bots or things like that, then it can be kind of really kind of frustrating for the broker. So yeah, a lot more kind of work to do, and a lot more we've explored within the kind of e-trading report, which is, yes, as you said, coming out very soon.
Yeah. So just picking up your point, Sav, on the digital, you know, as you said, there's no point in having a digital environment in SME with the systems to be able to respond instantly, to then take 2 days to come back on a referral. You know, I guess from a Zurich point of view, that would be, you know, unacceptable. And I don't know the results of the e-trade survey, but I'd be keen to see what it says from a Zurich perspective, because that speed of response has been really key for us there. You know, we respond to 50% of our e-trade referrals in 30 minutes. 60% of live chats are answered within 60 seconds. It is in that space to make sure that we are responding instantly rather than, you know, taking 2 days to respond in that environment. That's just, you know, for me, it's not acceptable. So I think just picking up the point as well on live chat, it's interesting because if you'd have asked us 5 years ago, phone into our SME business was the primary communication method, whereas there seems to be a proliferation of move towards live chat, and people really do like to utilize that capability. And that is actually now the primary communication for us with our brokers in that SME actuaries environment, as much as it is on the Zurich Online. But I guess it's because it's instant, isn't it? And you can look to resolve queries at the point of contact. Whereas I think perhaps sometimes when brokers were dialing in on the phone, it might not have been as easy to get it resolved instantly. So for us, that's working really well, and it's important that we offer all those different ways for brokers to contact us, we're not going to push them down one particular route. But I do think it's interesting that live chat does seem to be increasing in its use by brokers.
These innovative tools, can all really add value to that relationship. And what we've seen in the e-trading survey, as well as the commercial line survey, is when the broker feels more understood in terms of their preference of communication, the responsiveness, and that really helps drive the relationship building going forward, because having that capability. But then if as you quite rightly said, like if you have the live chat functionality, and that the responsiveness should be really quite straightforward and instant when it comes to live chat. And sometimes if a broker is waiting for a response or may require more kind of detail, where there is needs to be that discussion over the phone or via email, that has to have that kind of detail behind that. But it was interesting that one area that we did find, and this has been the case for a kind of number of years, where we found nearly 60% of brokers who are e-trading are using a combination of both kind of trading routes. And whether that's, of course, that comes down to availability or insurer panels, or certain products being on that. But that's a trend that kind of continues, and something that we've kind of explored more so in terms of the reasons why that brokers are using a combination of both trading routes. And yeah, we had nearly 30% of brokers using kind of insurer extranets, 12% using broker management systems, and 59% using a combination of both. So it's very, very interesting to see what will happen kind of in the future, if that continues to stay in that same way, or if as more products and insurers are available on each of the systems, if that trend goes towards one or the other.
No, it's fascinating. I've actually had a quite a timely question on the live chat discussion just come through. So we'll move on to do a few sort of audience questions now. So I'm just going to sort of fire them at you. But an interesting comment has come through. Do you find that brokers are led towards live chat because they're unable to get through to an insurer on the phone or by email? So that kind of ties in then to that responsiveness point that we were perhaps discussing a bit earlier. I don't know if any of the panelists have got a view on that one.
So from a broker's perspective, absolutely. It's a frustration for our teams. I think the art of the phone call is being lost somewhat, and I think face to face, we know develops good relationships. Having a conversation on the phone can develop a good relationship. You're not going to develop a relationship through live chat. As you can imagine, I don't spend a lot of time on live chat trying to place fairly regular insurance products, but in my personal life, when I've got a bit of an issue, I just want to pick up the phone to speak to somebody. And maybe that's a generational thing for me. Maybe I've got to that time in my career. But I just find that I go through a loop of what is it? How is it? Let's look at it. Oh, sorry, you need to ring. So I think more and more so, and it's not, we're not excused from that. At Valang, I have a concern that people moving away from phones to emails, sending quite lengthy emails when they could really have a 5-minute conversation and a very short email confirmation. So I think moving to live chat and moving away from phone calls, I think is a bit of a concern for me.
Mike, do you have just curiosity? Do you have with your kind of insurer partners more face-to-face video calls like we're doing now?
Not so many. No, I think organised meetings, but just a regular interaction. If you've got a query, I don't think people are picking up a Teams call and answering it. So that's not happening. I mean, it'd be great if it did, Saf. I mean, that'd be better. But I think just picking up the phone and I think the insurers will probably say they ring brokers and nobody answers the phone, and the brokers will say they ring insurers and no one answers the phone. So I think as an industry, I think I'd like to see us have more straightforward conversations.
Yeah, definitely.
Yeah,
Morgan, do you have anything to add on that?
Yeah, I suppose the answer to the specific question is, I don't know. If they ring Zurich, they'll get somebody on the phone in our SME or our mid-market divisions. SME, we have pushed for brokers to use live chat because that is something that we see as being able to resolve things at the point of contact instantly. That said, if a broker wants to call us, we've got 250 people in our SME team that'll pick up the phone as well. So for me, it's about, Mike said it earlier, horses for courses. I think it is horses for courses. We want to be there for the broker to interact with us in the way that they're most comfortable with. Just picking up your point though, Mike, I do think there is a generational shift that we see in our business in terms of the way that people want to communicate, and whether you agree or disagree and think it's the right thing. I prefer to pick the phone up or meet somebody face to face, but I do think that there is a generational difference, perhaps, that people are more inclined to utilize some of the digital tools like live chat because that's perhaps what they're used to doing in their in the personal lives as well as in the work lives.
No, definitely. We've just had a few more questions come through, so I'm just going to go through a few more. We've had one from Paul, who wants to ask, what is the panel's opinion on the use of third-party data by brokers to speed up and enhance the customer experience and insurer assessment process? So I'm not sure who wants to take this one.
You say that one again, Katie, please, if that's all right.
Yeah,
Third-party
of course,
data
yeah.
from, yeah.
Brokers to speed up and enhance the customer experience and insurer assessment process.
Okay. So I'm guessing the question's probably pointed in terms of when a broker sends a submission into us, how can we enrich that data in order for us to be able to make a quicker assessment of the risk? That's perhaps where the question is going, I guess. So, you know, we are using different data points within our business when a submission comes in, either new business or renewal, that will pull that data from different sources to give us a view of risk. So, you know, there'll be the basics like the flood, some subs, etc. But what we're trying to do is take it further to give us a view in terms of crime rates from a property perspective regarding postcode, financial information that we can pull from different areas in terms of financial stability and performance. There's lots and lots of different data points, a rounded view potentially of the client at that point of submission in order for us to make risk assessment. What I would say is, though, on that is we're still going to be able to get more from the right conversation with the broker about that client particularly in a more complex environment. So yes, I'm really supportive of using third-party data to assist us with risk assessment, but there's nothing better than speaking to the broker either face-to-face or on the phone to really understand the client.
No, definitely. And Mike, are brokers in turn sort of, are you guys really using third-party data at all when you're sort of going to the insurers for these conversations?
Not as much as perhaps we could. For flood exposures, absolutely. We're looking at those. We're looking at rebuilding values and making sure we have those conversations about adequacy insurance, adequate systems insured. We're tending more to try to have the conversations direct with the clients and gather really good quality data. We see that as an opportunity to build a relationship with the client and to show the client that we're taking time to understand their risk, rather than providing the client with a really efficient response based on third-party data we could draw from a number of sources. But for us, that engagement is really important for us.
No, definitely. That makes a lot of sense. And then another question come through. When selecting an insurer, do you take into consideration their loss adjuster panel and in turn their regional reach and responsiveness?
So we do, certainly around claims. So when we do that insurer survey, we spend a lot of time speaking to our claims team around responsiveness and the willingness to pay claims and the service that the clients get. If we have any issues in that regard, we tend to tackle it at a national relationship level. And we then encourage our teams to deal with certain insurers around, our preference. So these are the insurers that we prefer. We prefer them for these reasons: for the level of engagement, the scope of cover, their ability to compete, their long-standing relationship with us, and the relationships that they build. And if there's an insurer that we have a concern with around claims, we will probably exit that relationship. And I can think of one relationship that we exited within the last 3 years on an account basis. In terms of the loss adjusters they use, our claims team work closer with their claims contacts to make sure that the panel of loss adjusters is something we can work with. And with our larger clients, we also encourage nominated loss adjusters. You know, where there's a frequency of claim, we want the loss adjuster to be able to meet the client and understand the client and build a relationship and a rapport and some trust, because there's often a little bit of distrust or maybe cynicism from the client on behalf of the loss adjuster. They feel the loss adjuster is there to trip them up when they're not. The loss adjuster does act on behalf of the insurer these days, but they're there to deliver a fair outcome for the product the client's purchased. But where we have a loss adjuster that knows the client, we feel that's just a lot better.
No, definitely. I mean, Morgan, do you have anything to add on that loss adjuster relationship as part of this ecosystem?
We've obviously got a panel of an extensive panel of loss adjusters, and where brokers or indeed clients have got particular preferences, then we're open to having a discussion about how we facilitate fulfilling the demand from the client or the broker's perspective. And as I say, our panel, is pretty wide from that perspective as well.
No, great. And I sort of want to circle back to talk a little bit about the soft market as well in terms of communications. We've had a comment come in. Surely the question of surprises for the client is the role of the broker to pre-warn their client when they see the market moving up or down. So I don't know, it's more sort of a comment than a question, but I didn't know if any of the panel wanted to sort of respond to that, because clearly, obviously, communication between the broker and the client, as well as between the broker and the insurer, there is key in these market conditions.
Yeah, so I think that's true. A big part of the broker's relationship is to look beyond, to look at the landscape and to talk to the insurers, talk to their clients and what may be coming over the horizon. We talk to them about the market cycle. We explain to them what a hard market is, what a soft market is, and why it changes, as much as it is frustrating for us from time to time. I think the way in which the financial lines and the cyber markets hardened, and also the extent to which the market softened in March and April, caught some brokers, including Volang, a little bit off guard. And maybe we should have been a little bit more searching in our analysis of what the market could or was likely to do. But yes, so and I agree. It's one part of the job that we do for our clients.
Just from the insurer perspective, though, we need to be clearly communicating to the brokers as well in terms of individual clients in sufficient time to enable them to manage that with the client. So I guess, Mike, when you were talking earlier around no surprises, if you're not expecting a carrier to do anything significant, for example, with a particular risk, and then all of a sudden they're wanting to reduce capacity or increase the rate significantly, that unless we're talking and communicating to you that the reasons why and in plenty of time, then we're creating you a problem, I guess, is what you were alluding to earlier. So yes, managing the client's expectations from a macro market point of view, but that individual discussion from insurers needs to be done timely to allow you to manage client expectations, or indeed you go to market or whatever you need to do to ensure that you deliver for the client.
That did also come out in many of the broker concerns that were we have a question in the survey about broker concerns for the kind of year ahead, and the soft market was definitely referenced a great deal by brokers. And I think when we're touching upon that point, I think that clarity of kind of the information, the guidance of market conditions and changes that potentially could be coming is so appreciated. And many of the brokers did comment in the survey about increase of competition, but I think doing having that added value, adding that value to that relationship with their customers, and with further guidance and information would really help in terms of growing that specialism between the brokers and their kind of customers.
That's really interesting. And on a sort of somewhat related point, we've had a comment coming from Martin. He says, Mike's point that insurers should be fully aware of the direct impact on a commercial client's business is an important one. They have been significantly impacted by the market in recent years. Does the panel acknowledge that the improving market conditions should be passed on to those clients quickly, be it premium reductions, cover improvements, or enhanced low claims rewards?
Yes, around the speed, should it be done quickly? Yes, is the answer to that. If the market challenging and the client, we need to recognize, and the risk profile of the client is good and the claims position good, we should recognize that. I think what I would say from a Zurich perspective, just reinstating earlier, we're not going to chase the market to the bottom, but absolutely we will recognize market conditions and reflect that business premiums with particular clients that are performing well. On the point around low claims rebates and cover enhancements, yes, again is the answer. I think what we, even in the hard market conditions, what we weren't in the practice of doing was removing loan to claims rebates for clients because perhaps the market would allow that. Going back to my point around consistency, we try to be consistent and as much as possible, and taking low claims rebates off clients in a hard market environment certainly wasn't something we were looking to do. So if we've got new business opportunities coming, LCRs definitely is something that we would be looking at. And we're probably in an environment where there's more discussions around long-term agreements taking place with clients as well. So from our perspective, we definitely want to have those conversations.
Yeah, and I would agree entirely, but I come back to that point around sustainability. If savings are available to the clients, let's do it in a sustainable way that reflects well on our industry, rather than to go up and down like a fiddler's elbow.
Yeah,
I'd rather enhance the proposition if there's some greater scope. So let's give the client the opportunity to have less claims in the future by investing heavily in risk management. Whether the insurers do it or they pass the client a bursary, or it's not, the land doesn't trade very often on insurance premiums. It's around the advice and the support for the longer term that it provides. But if there's a cheaper quote available, we have to make it available to the client, and we have to have that discussion with them.
Yeah, definitely. I've got a question about AI. As AI adoption accelerates in insurance, will it become evident who has embraced these technologies and who has not? Could those lagging in AI integration risk falling behind in efficiency, customer experience, and competitiveness? Don't know which AI savvy analyst.
Yes, I think yes. Yeah. I'm no AI expert, but it's obviously an ever increasing conversation that's taking place, in our industry as well as others, financial services particularly. I think in answer to the question, yes, I think if as a business you're not exploring the capabilities of AI, particularly for us, I suppose where we do use it a lot is in what you might call our back office functions and capabilities, just where we can automate processes that were being done manually previously. We're very much looking to do that, and we're using it quite a lot. I think what I would say is the one thing we need to bear in mind is that I don't believe that AI in certain instances will replace that human element in our industry. And I think if it does, our industry will lose something that it's got. And at the beginning of the call, we talked about relationships. So for me, yes, AI is there to advance our capabilities. However, let's make sure we keep focused on the relationship part of our industry as well.
Yeah, and that's so important. I think when you look at every industry, not just the insurance industry, those who don't take advantage of new innovative solutions to drive efficiency, to really free up time of brokers and insurers in areas that they could be spending building those relationships, understanding their clients far better, and really finding those solutions that work well for the broker. I think that, whether it's AI or different solutions that would drive kind of automation, would really need to be is something that should be taken advantage of and understood more. But at the same time, everything has to be done with that right balance, and having that human touch is so critical to making sure all the different elements that AI can bring is successful.
Yeah. Good example of that, Sav, would be we just launched internally a tool called Policy IQ, which is based on some AI technology that allows us to read policy wordings and compare policy wordings in an instant by running it through the tool, whereas previously that would have been done manually. That's a great example of utilising AI to free up our underwriters' time that would have previously been spent sitting reading policy wordings. Yes, we need to check and ensure that the AI is working as we would expect, but it's just a good example of what you say. Utilise the AI to free up time to be doing something that's probably as productive or what they were doing previously. So
yeah, I agree.
No, that's fascinating. Well, that hour absolutely flew by. So thank you so much, guys, for the excellent conversation. It's been really great to pick your brains on this subject matter. So thank you so much for your time this morning, panelists. Really, really appreciate it. And thank you to everyone tuning in as well to the webinar from home or offices. Thank you so much for your time this morning. I hope you've enjoyed being with us to chat through the commercial lines results and associated trends. So thank you very much. I'm sure we'll see you all hopefully at BIBA next week.